The 5-year plan I'll be reviewing here as an introduction is built on a number of spreadsheets, and the first spreadsheet that has detail is the data input sheet, which feeds a lot of data to the other and gives you a chance to pre-plan. I have a sensitivity analysis sheet which allows you to do both a manual, high, low, medium, up to 12 scenarios, and then it is integrated with a statistical add-in that creates a separate spreadsheet with tornadoes and all that kind of good stuff. We have these sheets that feed the financial statement. In here we have the sheets that feed the financial statement, and these sheets, as you can see, are the various aspects of the financial statement, not in the order, of course. We would start out with current assets, other assets, and so on, but it's all here, including that we'll be getting into fixed assets and long-term liabilities. The summary sales is kind of the heart and can be a tremendously long sheet, and a lot of your benchmarks end up on this particular sheet. We can do payroll, bonuses, and contract. We can add additional payroll if you have direct and indirect, or we can integrate your own payroll worksheets. And down here we can do a very fast G&A calc. In here we have the complete financial statement with the indirect cash flow included, and also we'll show the this balances either to the cash account. I set up 2 cash accounts. One is the base operating cash and then the overflow, or we have to have investors put money into it, and there's an interest rate, calculates the interest, and then balances the balance sheet. Then we have various summary sheets. We have a summary which is based on the Robert Morris financial model, now called the risk management financial model, and we can do annual and comparatives and so on. Then we have assumptions, an investment analysis sheet, break-even analysis, and a direct cash flow worksheet. This is the actual menu system, and it's all hot linked in. We can go directly to a sheet, and then using the back. All these sheets can be varied to your needs. We're available in the local area through Sacramento area, and we can also fly out. We do have web conferencing capabilities. Happy to use that and have used it in the past. We have many tools available. Mind mapping is just one of many. Word for mail merge, including charts. We can create whole sentences if we have to in Excel and include it into the paragraphs in the business plan, depending on how complex you want it to be. So contact my consulting company shown below, right down there, and let's see if we can do some business together. Thank you. Hello, welcome to the spreadsheet. This looks identical to the final screen in the introduction. I'm going to take you on an overview of the sheet. I can't get into detail. I'll do that on future videos. And just want to make a comment that everything in here is highly customizable, and you'll see why in a minute or two when I get to some of the detail. The input sheet is where we can input a lot of data, such as whether it's forecast, maybe some actuals in here with some budget here. And once we put the date in here, we then can, that'll automatically update all the spreadsheets. And of course, there are various other data items, and we can add to this sheet and use it in your forecast, but I found this to be pretty adequate. This particular area here is where you input data that's used in the other sheets. You actually type in what you want to use for these asset categories on your financing, on your general summary sheet, and in your depreciation schedules. And we can take items as we add them, and we can finance them, and we can the rate of financing and the amount that's financed. So for instance, if we buy $1 million piece of land, we'll finance $950,000. Years depreciated will be 30. The years financed I have is 30, and the current rate at 10%. This automatically updates the whole spreadsheet that references these cells, including the final financial statement, which when brought into balance properly calculates the interest expense during those years. This can be used for input to quickly update the starting points in your depreciation and the long-term schedule. If you have carryover information, we can input it here, or we can do it directly in the sheet. I'm going to show which fields on here are constants and which are formulas. I have a macro that does this. I first name this area, which is ADEL, and then I run a macro, which is this quick one here, or I have a macro memory memo, which also does the same thing. We now know by looking at this chart here which of these are constants and which are formulas. You see this is being picked up from up here. Over here we have the constants and formulas, and you can see we're picking some of that up and some of it we're inputting. Just a handy thing that I can do when we're working on a spreadsheet. Especially if you've made changes and you've overwritten a formula, it's nice to be able to quickly see where you might have an overwritten formula that you want to, an overwritten formula which you want to convert back to a formula. I want to go over to the financial statement. Now at the present time, this financial statement is in balance. This is the balancing portion here. We have the assets, the liabilities. We have the summary of revenue, expenses, EBITDA, all that kind of good stuff coming down to net income. Down here we have an indirect cash flow, and it shows the cash and the cumulative cash required. Down here we have the more detailed backup for income and expenses, all modifiable and referencing other sheets. Okay, let's move on to what I call the sensitivity analysis sheet. We have two ways to do our sensitivity analysis. One is just to pick, maybe you can have up to 12 scenes on this statement, and the calculations are put over here, and we can modify this to your needs. What I've done is created variables in the spreadsheet, and then one returns it to the base variable. We can see the balance sheet is out of balance, so I'm going to transfer, it's called transfer final balances, and what it's doing is bringing the balance sheet into balance. We now have created the scene, and this will transfer the scenario down here, and we can now go ahead and input new variables in here for our, I've input worst case for sales and worst case for expenses. I did not change the amount of subordinated debt from investors in here. Once again, we see it's out of balance. Let me show you that over here. You can see it's out of balance here on the financial statement throughout all 5 years. Okay, let's go back. We're going to transfer final balances, and it has now recalculated the interest, all the debt needed, and so on and so forth. And it's brought our balance sheet into balance here. And it's showing that we need some investor input, which you'll see later is caused by the fact that we're increasing our construction in process. So let's transfer this scenario down. So now we have kind of a worst case scenario. I've now put in a best case scenario where we're showing the lowest cost and highest prices. We'll bring this into balance. We're now in balance, and let's transfer the scenario. And so now down here you can compare current forecast, the worst case, and the best case scenario. Easy to see down here in profit after tax. All this can be observed and modified in the plan. Now I'm showing here approximately 10 sensitivity items, but we can increase that just by inserting additional lines. In addition, I have set up down here an area where we would do an actual sensitivity analysis where we can take these variables and run hundreds of scenarios within an add-in that I have that creates a separate spreadsheet and does tornadoes and gives us the variance by category, by input item, and then we can delete certain ones that have little effect on the income and zero in on those that do. Then we can zero in on, can we tighten up our knowledge of those things so that we don't have to have our variables such as having fixed contracts and so on.